What is Under Armour Incorporated's main sources of cash? It is made apparent in the consolidated financial statement that 35% of the net income or cash flow is from retail sales performed mostly in North America. Additionally, the company added $250 million or 46% of net income from long-term loans. The question is this good news or bad news to its managers, stockholders, and creditors? What is Under Armour Incorporated's main use of cash? Is this good news or bad news? While the loan poses risk, the combination is good news to managers, stockholders, and creditors, as it shows the company is in a growth phase, as made apparent in its financial documents. The main use of cash appears to be reinvestment in the business, acquisitions, and overall growth in the company.
The three most significant differences between net cash provided by operating activities and net income are: to get net income, you take total revenue, subtract the total cost of goods sold, operating expense, depreciation, and taxes. The net cash flow would be calculated by the sum of net income, expense adjustments, and real-world interest. The net cash flow will use the working capital of a company. Working capital is the measurement of a company's efficiency and short-term health. Working capital is the difference in assets minus the liabilities. The operating activities are also used to measure the daily purchases of different items. Therefore, the net cash provided by operating activities are the day-to-day operations and the cash flow through the company, and net income is the income the company will receive throughout its lifespan.
Answering question number 3, did Under Armour Incorporated buy or sell more plant assets during 2014 than in the previous 2 years? How can you tell? Well, yes, Under Armour did purchase more plant assets in 2014 than in previous 2 years. You can tell by looking at the balance sheet, as we will look in the further slides. First, we'll explain what a plant asset is. A plant asset is an asset that the company has that has a life of at least 1 or more years. They are used to generate revenue for the company in their respective ways. Some examples of a plant asset are land, equipment, internal software, fixtures, furniture, buildings, and there's many more. These assets are depreciating, so that means that they lose value over time and when they're being used. And yeah, so overall they're just an asset that has a life of 1 or more years, and they are used to generate revenue for the company. So going back to question 3, how can we tell that Under Armour Incorporated purchased more plant assets in 2014 than in the past two years? Well, looking at the balance sheet under the property and equipment net category, we see that in 2013 that the assets were worth $223,952, and that's in the thousands. But in 2014, for example, it was $305,564, once again in the thousands. This growth shows that Under Armour purchased more plant assets because the assets went up. And since they are depreciating in cost and value, this shows that the increase was solely based on the purchase and the gain of more plant assets to the company.
Question 4 is, identify the largest item in the financing activities section of the consolidated statement of cash flows. Explain the company's probable reasoning behind this activity. Long-term loans. The increase in cash flow likely was needed for the company growth in the market, as it appears that the company itself has a good financial standing. Purchases of property, equipment, business, and assets came to 73% of cash flow before financing, which appears to be the probable reasoning behind this activity.
The overall net income for the year ending in 2014 was $208,042. The company ended the year and had roughly $219,033 of net cash provided by operating activities. This means that they have a greater amount of assets and have a positive earning. The company in 2014 have purchased land of $140,528 and had several other assets and used cash of $152,312. This means they have a lot of cash flowing through their company currently. The company also attempted to pay off a $13,750 loan. The company has increased their net cash and the cash equivalents by $245,686. At the beginning of the period, they started at $347,489 and ended with $593,157 in their bank account. As you can tell, they have increased their cash assets significantly through the year of 2014. They have increased the cash flow throughout the company and have started bringing more money through the company. This means that they will have more cash in their system to help grow, buy more assets, and continue to thrive in the environment. Some more information that would help me making my evaluation is how well their turnover rate was with paying their loans off and how much more debt they currently had. With the amount of debt they have currently, you would be able to really make a tell if they are currently paying off the debt. This $593,175 is truly their own and to be put back into a company for good use.